Hello, my name is Esther, analyst here at Nonce Classic. I'm so excited to have a special guest here with me today, Yoseph, the general partner of Lava, a venture fund looking to boost the Web3 ecosystem in Africa. Hello, Yoseph. Thank you for joining us today.
Hi, Esther. Good to be here.
I know you have amazing endeavors right now in the planning and quite a track record in crypto. Could you please introduce yourself first for our listeners?
Sure. So my name is Yosef, and my claim to fame is actually being a K-Sawi. I'm married to a Korean, and so I spend a lot of time in Korea and will be in the next many years and decades. But originally, I'm from Ethiopia and grew up between Ethiopia, Tanzania, Kenya, and a little bit in Nigeria as well. I did my undergrad in the US. I studied at Harvard and then worked in tech in Silicon Valley for a while. And then I got kicked out of the US because for visa reasons, because what I studied and my startup work did not match on the government database from the 1990s. So I decided to move to New Zealand and build a new visa program with the New Zealand government to create a new model for how we think about immigration and run part of immigration outside of government and build it as a startup. Um, so I ran that for 8 years, designed it from the user customer lens. It's a very radical experiment. We haven't had something like this run before. And we build it as a community because it's one thing running immigration, but it's another thing building it as a community because immigration is very much human experience. And when you're talking about founders, investors, startups, the core currency of a lot of those activities is community. So build it as a fellowship program, and it became a black hole of talent. So many amazing people from around the world were attracted to it. I think we've got a few Korean fellows, as well as many fellows from all of Asia. And there's a lot of crypto folks who are interested in this. One, because the idea of running immigration as a startup is very exciting. And by the way, this was before the network state conversations and all those activities were happening. And also second, the idea of using a small country as an incubation nation for global change was also very attractive. So during that experience, I had an incredible opportunity to connect with, make friends, and learn from some of the best builders in the space. In our first cohort, we had Fred Ursum, who co-founded Coinbase, and he left Coinbase to then build Paradigm, and then he brought his co-founder Matt Hong to join the fellowship. We've got the head of the Ethereum Foundation, Ayam Miyaguchi. We've got Naval, who's been a big advocate for the crypto space, Tim Ferriss, Kevin Rose, some of the core contributors to so many protocols. Joey Crook, who built the first Ethereum application, and just so many types of builders. So it's such an incredible experience building that community and also working with some of these individuals to help change the Web3 landscape in New Zealand. But the deeper I went into the crypto world, the more it made sense to me in the African context because how I told you how I moved from East Africa to the US to study. The internet changed my life. It opened up the world for me. But the internet was gated. It was gated so much that even to apply to college, I had to borrow a friend of a friend of a friend's credit card to submit the $70 online application fee
Oh.
because we did not have any form of, at least I didn't have access to any form of digital payment tools. And the sad reality is that is still a big problem today. So it hasn't changed in over a decade because even though many African countries have built very sophisticated local payment infrastructures digitally, when it comes to accessing global infrastructures from payment to online tools and applications, you hit a big friction point that and we can walk through that it's hard for folks to access that. And that's where I saw crypto making a lot more sense on the African continent. So I started diving really deep into if actually the Web3 world makes sense in the African context. We talk a lot about it around the world. And since day zero of the crypto revolution, we've been talking about let's bank the unbanked and, help emerging economies and all of that. That's been part of the narrative. But I had to really flesh it out from first principles, if that makes sense, and spend a couple of years just talking to normal people, regular individuals, mostly young folks, students, and recent graduates, just to try to understand where their life is at, how they're learning, how they're participating economically, where they're earning money, how they're using technology in their lives, what do they want to see in their life, where do they want to go, and what their interaction has been with Web3 tools and physical communities. And many people can relate to the rabbit hole, but the deeper I went to the rabbit hole, the more actually the intersection of crypto and a lot of the unmet needs in Africa made sense to me. Probably not in the way that places around the world think about it, but it made a ton of sense. And that's where I'm putting a lot of my focus and energy towards right now.
Wow, that is so amazing. Well, I know we touched on it a little bit, but I'm so excited you mentioned that you wanted to take this from first principles. On that note, why Africa and crypto?
Yeah, so just to give you a little background, Africa is a big continent. It is 54 countries. Um, it is the size of all of the United States, all of Europe, and all of South America combined in terms of
Wow.
population, right? And in the next 20 years, we're going to add a whole new Europe to the continent, actually, to Europe, to the whole continent in terms of population growth. So that's just a little bit of context. 1.4 billion people, and it's doubling in the next 27 years as a whole continent. It's the youngest population in the world. Median age is 19. So that's the normal
Amazing.
age around. I don't know. Do you know the median age in Korea?
I don't, unfortunately, but it's definitely not
Probably
that.
like in the early 40s or something like that.
Exactly. Yeah.
Um, and so while population is declining heavily in other parts of the world, Africa is growing really fast. Um, and Africa is like many African countries uh, became free from colonization in the last few decades. So we've got a lot of young countries who have gained independence recently. There are a lot of challenges across many verticals and areas, economically, politically, socially. But what's been interesting is that technology has played a big role in the continent so far. So, how in many countries around the world, in terms of connectivity, we built landlines, right? Africa skipped that whole generation and moved to mobile, to the point where now 93 out of 100 people have a mobile SIM card across the whole continent. And then we access the internet on mobile. So now 590 million Africans have access to internet, and that's growing by 6% every year. Um,
Wow.
and 72% of those access internet on their mobile phones, right? And finance is the cornerstone of any economy, right? So having financial access, means of payment, instead of carrying cash money, in plastic bags moving around, digital money became a thing. So mobile companies rolled out what's called mobile money. It's like a little bit like WeChat in China, where basically you use the telco network to send and receive money, where your phone number is your bank account and is your
Oh,
KYC, and is how you pay bills, how you receive salaries, how you make payments. And that just blew in so many different countries, to the point where even a country like Kenya, where mobile money is the biggest, their GDP is $120 billion last year. Do you know how much money was transacted on just one company called M-Pesa?
how much?
$260 billion. So
Oh my
more
God.
than 20 countries' GDP was transacted through just one mobile money company, right? Which is crazy, right? And I told you like the population size 1.4 billion, 621 million Africans have a mobile money account, and they transacted over $700 billion last year just on mobile money alone, right? And Africa makes 70% of the world mobile money industry. So it's like really fascinating to see a continent just jumping through over multiple generations of infrastructure building and just using frontier technologies and running with it. And some of those countries that I mentioned have way better sophisticated payment infrastructures than many Western countries because of these advancements in adoption. So we look at those patterns and things, but those traditional innovations and technologies today, they run into a ceiling when they hit borders. That's because
Mm.
whenever you're trying to do commerce across borders, and I told you Africa has 54 borders, right? So when we're trying to talk to each other, doing business with each other, trade and all of that, you run into issues of the global financial system. So in Ethiopia, you're in Kenya. If I'm trying to send you money, do any sort of transaction with you, even using the same mobile money company, we have to go through the US dollar, through the SWIFT system, jumping money through Europe, America, and all of that, and coming back. It's just so costly. It's very expensive, takes a long time. And the average payment for fee for cross-border transactions is almost 10%. So you pay almost 10% of what you're trying to send in cross-border transaction fees, right? So when you look at that, that's where crypto has seen massive adoption on the continent. And we're still scratching the surface. But last year, we had about $100 billion of on-chain transaction on the continent, which is relatively small compared to the volume around the world. But 84% of that was in cross-border transactions. It's small because a lot of African users, they transact in smaller amounts. And that's where crypto primitives and tools make so much more sense
Mhm.
because credit card companies, Swift is not made up for, small transaction amounts. It's made for hundreds of dollars, right? But then when you're exchanging a lot of money in small volumes constantly, then cheaper networks make a lot of sense. So that's one of the biggest areas of adoption that we've seen. The other area is that based on the current macro conditions, dollars are so inaccessible in many African countries. So if you look at even the biggest African countries, the if you look at the biggest challenges those countries are facing, you can associate the majority of them to dollar access. So when the trade deficit is negative in a bunch of countries, when a lot of their global debt is denominated in US dollars, um, access to dollars is very, very scarce. And that is
Wow.
affecting regular people, day-to-day people. So that's people who are doing small businesses. If you're selling shirts and importing it from India or China, or if you have a small shop, you're selling phones, basically anything that requires you to bring something from elsewhere or send money elsewhere, you run into access to US dollars. And the interesting thing is US dollar stablecoins have found a big product market fit in so many African countries because you can access US dollar stablecoins easier and faster than accessing fiat dollars. Banks don't give you dollars. Nigeria, which is the largest African country, last I checked, the banks had a maximum of $20 a month you can transact on your bank card or $500 a month that you can send through online transfer, right? So how can you do your business when you're working with such limits, right? And that's the sort of like the case for crypto. That's just a pattern of what we've seen so far.
That is absolutely mind blowing. Like you mentioned, I mean, the crypto narrative, it's always like, help emerging economies, but I didn't know that the need was at such high demand. And like the quality of financial transactions right now. That's so crazy and amazing to hear that the tech is being adopted at such rate. I'm just going to go
Actually,
with my,
just on,
yeah.
just on that, when you say like crypto can help a lot of Africans, it's actually, I think it's the other way around because I've been around the space for a while now. And as I mentioned, since day zero, we've been talking about, you know, creating new financial systems and reaching mass adoption, bringing the next billion users to Web3 tools, and actually having real world use cases, right? This has been the big narrative of Bitcoin, has been of Ethereum and a lot of other chains. And my belief is that those real world cases and the mass adoption is going to come from places where Web3 tools and primitives are actually solving real people's needs and are filling gaps. And you go to the West, you go to Korea, you go to China, you guys have really decent working infrastructures. Yes, I get it for all of us privacy centric crypto users and first adopters. Like we want to have full sovereignty. We want to have kind of like our ability to do what we want to do in our own ways, and crypto makes sense for us. But that's a small
Mm,
portion of the whole population, right? And
mm,
so you keep hitting a ceiling of people who are using crypto day to day because the status quo kind of works for the majority of people,
mm,
right? And so to me, it's actually places, countries in Africa that have the conditions where the crypto primitives and tools are filling real gaps. It is a plan A in many African countries as opposed to plan D or E or F,
mm,
which is the case in many more sophisticated economies. So I think Africa has something really big to contribute to the global crypto ecosystem by bringing the mass use case, by bringing the real world adoption and user base from a place of recurring use, recurring fees, recurring revenue, and things that are embedded into our local economies. So I think that that's the best places where I think the future of crypto is going to come to life. Yes, we will all speculate. Yes, the bull and bear markets will keep going, and we'll see a lot of activities in other places. But when we're talking about real use, I think that's going to happen in places that have real gaps, and Africa is a big part of that.
yeah, 100%. I actually read a tweet like yesterday, and I think it was actually from like Owoki, and he said, we keep talking about how are we going to onboard the first billion users, but the real question should be, what are the first billion users going to be doing? And I think indeed, like the demand and supply with crypto and the current limitations of the African economy just match perfectly. And the idea of a borderless Africa, that really blows my mind. So along that same note, I want to dive a little bit deeper. I'm following my stream of conscious at this point, but I feel like one of the most exciting narratives right now in Africa would be associated with financial like institutions, if you will, or systems. I heard a recent talk by Yatsui of Animoca Brands, and he said the greatest limitation in crypto adoption he thinks right now is actually financial literacy. And that's why the numbers of tech adoption in Africa really blew my mind with mobile payments, because now I'm thinking maybe their financial literacy is actually better than mine because that's what they had to grow up with and they leapfrog that entire process. So, how do you look at, especially the products right now that we use in crypto? They require a lot of financial literacy, at least with what I'm experiencing. So, what do you think about the level of education in Africa and then Web3? And perhaps it can bridge it. What do you think?
Yeah. So I think there are different layers to what you're talking about. There is financial literacy around the basics of finance and the basics of money and how to use it, how to accrue value, how to plan into the future, sort of like the basic things that we all need to know and
Mm,
learn. And then there's another aspect, which is actually how to use the tools and applications that crypto founders have been building so far. And I think these two are separate conversations. In the first part of the conversation, a big pattern that I'm seeing is 40% of Africans live in cities. and I think 19 of the 20 fastest growing cities in the world are in Africa.
Oh.
So basically, you're seeing a huge part of the African population urbanizing. And what happens in urban areas is that more exposure to different types of tools, internet access, infrastructures, and all of that become more available. And so I think, at a broader level, that basic financial literacy part is going to, that's going to be figured out. I don't think that's the biggest hurdle for real people using money, be it digital or fiat, physical, banking system, or crypto, because financial literacy is financial literacy across the board. The other bit, though, which is about, are the tools we're building accessible and usable? I think there are many layers of questioning that. One is that when you look at networks like Ethereum, Ethereum is just so expensive, right? Mainnet is so expensive and it's just inaccessible. So earlier this year, I took Vitalik and Aya and a number of Ethereum Foundation folks across 4 countries, and we spent a month talking to a lot of real people, communities, founders, builders, just to help bridge the gap between the Ethereum world and African communities. And as much of the Ethereum values are really applicable in the African context, the network is just inaccessible. If you're transacting less than $10, it doesn't make sense for you to pay $10 on transaction fees, right? And that's on the cheaper side. Layer twos will be a big part of the solution, I believe, in making Ethereum accessible. We've got side chains, we've got so many other layer ones as well who are active. But I think the infrastructure level needs to focus on low transaction fees and low volume, high usage types of transactions that we want to have, right? And I think zero knowledge proofs are really exciting and interesting in bringing scalability on the Ethereum side. The other bit is the types of actual applications that we're building, right? So my thesis is that the tools and applications that are going to reach mass adoption in Africa are not going to be built by people in the Bay Area. They're not going to be built by people in Korea or other parts of the world, because existing crypto founders, they're not thinking of the world through the user lens most of the time, and they're not even thinking through the African user lens. So I think the best applications are going to come from the continent, from people who are seeing the world through the eyes of the end user, right? And I think we need to have really that disciplined lens of looking everything through the eyes of the regular average person who you're going to bump into the street and has a bunch of needs and has some access to technology and is trying to use crypto to get from point A to point B. Right. So I think that's one big part of my thesis. And the other bit is like some of us want to have everybody live in this utopian crypto world where every transaction is happening with Ethereum or some stable coin, and we're independent of nation states and all of that, and I want to live in that world personally, but I don't think that's how we got to think about when we're thinking about mass adoption, because ultimately the biggest value is going to come from very simple and easy user experience of whatever vertical tool that you're building, and people might end up using tools that they don't even know is being powered by the blockchain. And to me, that's a beautiful thing. That's a great outcome. So to give you a very specific example on that front, one of the biggest gaps that we have in many African countries is that service of credit, loans, lending. Right? So global economies rely on credit, right? Like if credit didn't exist, you wouldn't see so much economic growth. There's bad credit, but there's also a good way of doing credit in a responsible and measured way, right? So at the moment, banks in many African countries, they lend mostly to bankers because they're the ones who have stable jobs and properties and all of that to use, right? So if you're a small business owner, a student, or an individual, it's hard for you to access credit from regular infrastructures. So where do those players go? They go to some credit companies that charge ridiculous amounts as interest for
Mm.
small loans. Can you have a guess of what would be like an average interest rate in a country like Kenya? The average for a lot of lenders is between 10 to 27% a
Oh my
month.
God. A month?
A month. Some even charge 1% a day, right? And most loans are 30 days, a few weeks, the longest is 2 months. And most of the time, it is basically working capital. If you're ordering some goods or whatever, you need to supply your products and services. And there are people who use these services to also, when you run out of money and you need some credit to pay your rent or whatever, right? And I think a big part of that is liquidity access. A big part of that is pricing risk, and there's default issues. But I think that is a ridiculously high rate that it makes me think there's a lot of value that's left on the table by even profit-seeking credit companies to try to create services for broader use across those countries, right? So one very specific case is that there's a team that is taking your off-chain mobile money data. So if you think about how much data you have connected to your phone, it's thousands of transactions or even tens of thousands of transactions, right? That's a lot of rich data. Using that to create on-chain credit scoring for you to access
Oh,
on-chain liquidity, right? So it's using your off-chain data to access that. So that's a really, really fascinating area that I'm also really keen to dive into. The other area where we're seeing a lot of crypto use without even people knowing it is a lot of the major fintech startups across Africa, they're using crypto at the back end for some part of their function, including cross-border transaction settlements, because using the blockchain is just cheaper and faster to do that, or a bunch of them even for treasury management. When you're holding a lot of foreign currency and banks don't give you infinite amount of dollars, you go into US dollar stable coins and hold your treasury in that, right? And not to say that that's going to be the longest sustainable solution, but just giving you a sense of how people are using it. So on the front end, regular people are engaging with traditional fintech, but at the back end, it's actually being powered by crypto, right? So that's a really fascinating way of seeing the blockchain being used by the masses. So I'm giving you these examples to kind of think about it in a slightly different way of how mass adoption is going to happen. It's not going to be in the way some of us who breathe and live like, from the crypto fire hose on a day-to-day basis. The worlds that we're building might be potentially the worlds just for us, for the minority, right? If you're trying to serve the majority, you got to see the world through their lens.
right. Yeah, 100%. And I think that's a perfect segue. Your new project that you are working on is an effort to support these builders who will have real solutions to real world problems. So let's jump straight into Lava. Could you tell us a little bit?